AMD, should you buy it? That's the main question of today's video. So what we're going to do today, folks, we're going to look into this company's numbers and figure out the intrinsic value so you have an idea where this company stands. Ultimately, we want to find companies at a reasonable price. So AMD recently reported their earnings yesterday. They beat it by 2 cents. The estimate was 67 cents. The actual was 69 cents. But the company's stock price has been down over the last year or so by around 30%, pretty much a high of $113 last February, currently $86.24. So where does that leave us? Where does that leave investors like you and I? Well, I have it loaded up here in the stock spec software. The software is ranking the company a 7 out of 10. What does that mean, folks? That means on a financial statement basis, it's a relatively strong company. Over the last 5 years has been pretty decent for this business. Currently, it's looking pretty good as well. It's only getting docked in 3 different categories. What are those 3 categories? One being the price earnings ratio is trading at a premium. It's currently at 78.31 on average, where we want to find companies that have a price earnings ratio of 22.5 and lower. Now, on the trailing 12 months, it's even higher, sitting at 105.86. I don't know how we got higher price earnings ratio, considering the fact that the stock price is coming down a lot. But that is something we do not want to see. Another point where it's getting knocked off is their earnings per share. Unfortunately, the earnings per share actually fell by 15% over the last 5 years. Not something too great. If you've been holding on to this company, it's something you want to just keep a look at, because here's the thing, folks, why this earnings per share fell. Take a look at this, and the third X here is in their share dilution. Over the last 5 years, AMD has been diluting shareholders by 30%. That's massive. They increased the amount of shares outstanding by 30% from 5 years ago to today. So what happens in that regard? Earnings per share gets stretched out. We want to find companies that are buying back shares, folks, that have a plan to buy back shares, that decreases the amount of shares outstanding, so that way you can absorb majority of the profits. Sharing is not caring if the company is issuing out more shares, right? Now, not all is doom and gloom. Those are the 3 things that they're kind of messing up on, but everything else looks pretty solid. They have a really high current ratio, which I like. I think that's important, and it just helps kind of gauge whether this company can weather a storm that may be coming at them. 2.36, really strong number, a lot of assets on hand to cover those liabilities. The debt to equity is extremely low, sitting at 5%, which is looking pretty good. The net income is up over the last 5 years. The free cash flow is up as well. And the return on invested capital is sitting extremely high at 20%, where we want to find companies sitting at 10% or higher. They are double that. So if you are holding on to AMD, that is a really good metric to see on this business. And last but not least, their revenue growth is up by 36% over the last 5 years. So this company has been making strides. So what I want to do quickly is just take a look at their free cash flow statement just to see what that looks like on an annual basis, because I do know, so yeah, 2022, they have to still report that data is coming in, but the 2021 is, yeah, so free cash flow, $3.2 billion for 2021, almost 777 million for 2020. It's been growing by exponential amounts. Going back to 2013, we've been shown negative numbers, but it looks like they have been compounding. They are on a tear. Now, you're most likely investing in this company because you potentially don't believe in Intel. To be honest, I'm an Intel investor. I like AMD and I want to buy it for the right price. What is that right price? Well, we see that this company has been, nipping at the heels of Intel. They've been making huge strides. Unfortunately, it looks like it's been trading at a premium. Is that reflected in the stock price? Well, we'll find out. What I did, folks, is I inputted some numbers in the price analysis section of this software. And if you want to get your hands on this software, folks, follow the links in the description box below. did a 10-year analysis utilizing numbers that they've shown over the last 10 years to try to give myself a conservative amount of estimates to see where this company may go in revenue growth. And this is where I really got conservative, is their revenue growth going 12, 14, and 16% over the next 10 years. It very well could be in this 14 to 16 range, but I feel like the conservative amount of 12 is appropriate to put in there. Profit margin, utilizing these numbers that have shown as well over the 5-year and current profit margin sitting at 5.59, along with a price of free cash flow of 14, 16, and 18, with a price earnings ratio of 14, 16, and 18, 13% return. Scroll down, and the price is currently $44.89 of what we should be paying for this company today, compared to $86.10 where this company is currently trading at right now. So what does that mean, folks? I've done, if you've been following along, conservative estimates going forward, because look, this is a value investing channel. I like to try to stay as conservative because we don't know what the future may hold for a business like this. We have no idea what the economic conditions might be for a business like this. Interest rates are on the rise, and tech companies usually suffer when interest rates are rising. So in that regard, I'm trying to be as conservative as possible to try to anticipate all these wrongdoings, because if I can minimize my downside risk, the upside risk will take care, or the upside benefits will take care of themselves. So where does that leave investors? $44 is what we should be paying for this company today. Pretty much has to fall in half for it to be a good deal. I ultimately want to own this business, but I don't want to be paying a premium for it. And this seems to be the going saying for a lot of these companies that I'm finding on the market. AMD is definitely one of them, because this stock price eventually wasn't this high at one point. It did come down to the 50s range in where was it? I think October of 2022. Let's see. Yeah, take a look at that. Came down to about $55. So pretty close, but not close enough. That would have been an opportunity for us to almost open a position. But what do you think, guys, about this analysis here? I think AMD is still overvalued. That's the video, folks. If you enjoyed it and you want to get your hands on this software, follow the links in the description box below. Make sure you hit the like button and subscribe button. It means a lot to me. It means a lot to the channel. But that is it. I will see you in the next video. Thank you so much for watching. If you enjoyed this video, make sure you don't miss out on this stock right here. Now, I believe this might be the potentially best investment going forward in 2023, given everything that's happening.